Yeah, let's look at the accounting equation. Yes, what is accounting equation? Accounting equation is described as the fundamental framework of accounting, of accounting information. It's fundamental because it's almost the basis. It explains uh, the root of accounting information. And this framework or this basis are assets, liabilities, and of course, capital. We'll just take our time and look into these three categories of accounting equation, okay, and see how they can be achieved mathematically. Now, what is capital? Capital to a layman is described as the money, an amount of money used in starting up a business. Yes, accountants will call it as owner's equity. Yes, net worth of every business. That is what capital is all about. Capital helps us to understand the essence of reserve. It helps us to understand what fund is all about, what money, both physical cash and of course cash at bank, what you have on ground. Yes, this is uh, your net worth. Say somebody's net worth, it's a physical amount of money that someone has at the moment. Okay, it's almost a wealth creation. Yes, that is what we would describe capital as. An amount of money used in kicking off something, business, wealth creation, net worth of every business, and so many definitions like that. Now let's look at assets. Assets is described as tangible uh, information. An asset is described as part of a business organization. An asset is categorized into fixed assets and, of course, current assets. We call it fixed asset because they are assets that will last for a long period of time. That's why they are called fixed assets. Need I remind you that both capital assets and liabilities are balance sheet information. In our previous class, we have been taught the balance sheet. Yes, the capital, the asset and liabilities are for the balance sheet, which we have been taught that the balance sheet statement that portrays the financial position of every business organization. Now let's dive back to our assets. Assets are parts of the business organization that is categorized into fixed and of course current assets. We call it fixed because they are assets that will last for a long period of time, like your land, like your building, and etc. etc. So all of these assets that will last for a long period of time. We have the stock too. Okay. Now we have the other one called current assets. The current assets, because of this class, we'll be looking at just two categories of assets, although there are more. We have the fixed assets, we have the current assets. Yeah, because of this class. So if you read further, you will see other categories of assets, okay, that will be explained in other textbooks. Yeah, go to other reference material, there are other categories of assets. But for the interest of this class, we'll just have just these two, fixed and current, yeah, so that we don't take much of your time. Then the current asset are just an asset that doesn't really last for a long period of time. Okay, then we have the debtors. Debtors are assets. Yeah, we have the cash. Yes, we have we have the bank. We have the stock. Yeah, these ones are described as current assets. Yes, they are also categories of assets which are part of balance sheet information. Then we are looking at the liabilities now. The liabilities are described as we describe liabilities as an indebtedness, okay, as an amount that a firm owes an outsider. It's almost an obligation to pay a particular sum of money to someone, to an outsider, okay, to either a debtor, yes, to a debtor. Now, I want to look at the mathematical equation in this asset, liability, and capital. In order to achieve our asset, we have our asset is equals to uh, capital plus liability, while our liability is equals to asset minus capital, and while our capital is equals to our asset minus liability. That is how it is calculated mathematically. Okay, in our next class, we might just have a little uh, exercise on how to illustrate this mathematically. Thanks for watching.